What's up, everybody? It's your boy G. Today's video is gonna be on using a calculator for beginners, understanding risk management when it comes to using this calculator. So basically, when you're first getting into trading, the number one thing that you need to know is risk management. That is one of the most important keys when it comes to becoming a successful and profitable trader is knowing risk management and knowing what you're risking when you're getting in the trade. So I have this calculator that I started off using when I first started off trading. That was very helpful for me for knowing, okay, once I get in this position and I'm looking for this setup, I know how much money I'm risking once I get in this trade. So I'm just giving y'all a game on how to use the calculator and what the calculator is. So we'll pull up my web browser. It's called futures.stonex.com. It's a futures calculator to help you calculate your risk and whatnot when it comes to trading. And so let's pull back up our charts to give an example. Based off the way you trade and whatnot, it can be different from anybody. I trade supply and demand, so I know, for instance, when I'm looking for a certain zone, certain level that has been formed before price ever comes back to my level or zone that I'm looking for, I should already have those pre-calculations in my head of what lot size I'm going to pick to know how much money I'm going to risk. And so, just for example, this here would be my supply zone. We're in a selling market, so I will mark this out as my supply zone. In order to know how much money you're going to risk, these numbers right here that's on the side are the price scale. So it's basically telling you where price is on the chart. So right now, currently price is at 27,699. And like I said, I trade supply and demand, and this will be my level of supply that I'm looking for. So ultimately, price broke structure here, and all I'm waiting for is price to come back here, respect this level of supply, and continue moving down to the downside. And so since this price has already started making this low and I'm waiting for it to return to my zone, I need to know in my head, okay, once price comes to this level of supply, what positioning lot size do I need to be in so I know how much I'm risking when I get in this trade? Because when I get in this trade, I want my entry to be somewhat in this area where the zone first started, and I want my stop loss to be here above this area where the top of this wick is, since this is my level of supply. So my entry will be here and my stop loss will be here. And for example, let's say we only want to risk $300, and well, I need to change charts. 1 second. We'll go to micro. Micro gave same thing. We got this supply, price broke structure. We're waiting for this pullback. This will be my entry level here. This will be my stop loss level here. So while I'm waiting for price to pull back, I want to know how much money I'm willing to risk on today. And so that determines what lot size I need to be in. So let's say I only want to risk $300 today. So I would go to the right where this price scale is, my entry. And once you draw this blue line, it marks here as well. And it tells you the number that it's at. So 27,745. So I'll go to my futures calculator. I would type in the pair that I'm trading, which is NQ, but I'm trading a micro, so you need to make sure you're on the right pair. So I'll click micro NASDAQ. I would come here. I would type in where price is, where my entry point would be, which is 27,745. 27745.75. And then my exit price, which will be my stop loss, I need to put that in as well, which is 27787.25. 27787.25. And you need to make sure that you're putting the exact numbers and the point decimals when you're entering the futures calculator. But like I said, let's say I only want to risk $300 today. So I would need to know what size lot I need to be in to only risk 300, and the amount will tell you right here. So let's say we click a 3 lot. We press calculate. That's $249. That's close to 300. So if we can go up to one more, which will be a 4. Let's see what a 4 lot would be. A 4 lot would be $332. So that's telling me if I was to enter my trade here and I drag my stop loss, I'm either risking $330 or $240. And you already had in your mindset that you want to risk $300. So whichever one you're more comfortable with, the 330 or the 240, you could either go 3 or 4 lot in that instance. And so basically that's really it to it. That's how you calculate how much money you're risking on the day. So moral of the story is you need to know how much money you're risking before you enter a trade, so you can make sure you're not over leveraging your account and over risking your account. You're not risking too much money, because the purpose of trading is to trade to see another day, and we don't want any blown accounts or bad losses to where it might be hard for us to recover our account because you don't have any risk management and you're just clicking anything just to enter a trade. So this tool can be very helpful for beginner traders, or just, you don't even have to be beginner traders. If you just want to be for sure of what you're risking and what lot size you need to pick to enter a trade, then you need to be on this website every time you enter a trade.